Welcome into this week's long form episode, everybody, here on Mining Stock Daily. Trevor Hall with this episode to get you into Friday and into the weekend. Hope everybody is having a great day. We've got gold reaching that $2,500 per ounce level on the back of some geopolitical tensions in the Middle East. We will see how this progresses through the weekend and into Monday. This episode, we're going to go back to our roots in junior exploration on the financing side of things. And a lot of the people who are listening to the podcast have maybe heard of Medalist Capital, but there's very little information about this company. But they are serial successful entrepreneurs financing projects and companies for the last couple of decades. And we talked to one of their partners, Riley Keast, about the ethos of Medalist Capital, where he cut his teeth, where he formed his relationships, and how those relationships have been retained for a number of years through good markets and in bad markets. It's a great conversation with Riley, and one that's, I think, going to open up a lot of eyes with a company that is well known, but maybe a little bit less understood. Special thank you to Vizsla Silver, Arizona, Sonoran, Copper, and Fireweed Metals for their support of Mining Stock Daily. And as always, if you wouldn't mind, hit that like, subscribe, and leave a constructive comment within either the podcast network or on the YouTube. So, with further ado, here's Riley Keast and my conversation with him from Medalist Capital. All right, everybody, it's a real pleasure to welcome in a new voice and a new face to Mining Stock Daily. Riley Keast, Medalist Capital, welcome to the podcast. Thanks so much for doing this.
Well, thanks for having me. It's a pleasure. Pleasure to be doing this.
You don't do very many of these interviews.
No, we don't do any, actually. Never have. How do we
get so lucky?
You sweet talked me over that nice bottle of wine in Zurich. You must have sweet talked me.
But I sold you on the white.
For you, I guess.
I sold you on the white asparagus. I'm pretty sure.
That's what it was. Yeah, exactly. Yeah.
Really took you over the line here.
Well, right. we're just sort of we're sort of behind the scenes guys. So like if you see us go to a conference or something, we'll tend to know most of the people there. Not everybody. We'll know a lot of people there. So people know us for sure in the industry, but sort of outside of the people actually running the companies or people running money, I guess we're probably a little bit unknown. But that's not really where we're valuable. So I don't know that we've ever seen the benefit of doing these things. So anyways, all right. Maybe we'll find out, or at least we'll have fun. I hope so. Yeah, anyway.
We're going to have fun. I really appreciate it. Thanks so much for doing this. When I was trying to do a little bit of research on Medalist, and there's very, very, very little out there. And so I had to reach out to some mutual acquaintances for some insight. But, I was laughing. Medalist kind of operates in the shadows of the night of junior mining. Maybe talk about why you're not anonymous by any means. I mean, a lot of people know of Medalist and they know you've got a lot of contacts you've built over your career. But in an industry that is kind of, filled with personal and professional branding, where people want to be out there and be known, why kind of work in the corners here and not be more out in front?
It's a great question. Like kind of what I was just saying earlier, I don't know. I mean, just look at the time that you have to allocate in the day and where you can be the most valuable. And the way that we look at it is how do we be the most valuable on the transactions we're working on? And that isn't us being front and center and being promotional and being trying to build our own brand. It's more so trying to get transactions across the line for the people we're working for, or if we're working for ourselves on a transaction, trying to get that across the line. So it's really just how you spend your time, and maybe doing these kinds of interviews is valuable to medalists, and maybe it's not. I don't really know, but we're giving it a shot.
Yeah, we're gonna find out. I don't hold any responsibility of whatever happens, Riley. But let's talk about your professional history. Leading up to Medalist.
Mm.
Before we'll get into the ethos of Medalist here in just a moment, but maybe talk about how you cut your teeth here in this industry. And I mean, did you wake up one day and decide you wanted to work in resource capital markets?
Well, uh, we used to be the young guys. I guess we're kind of now the old guys. But so I started in 2004, 2005, and walked into investment banking. I was a CFA. I did a finance degree in university, so completely non-technical. And I walked in and I started working for this brand new investment bank based in Toronto, boutique merchant bank or investment bank based in Toronto called M Partners. And they put me into the research group in some sort of consumer product sector. And I was doing that for a very short period of time, but the it was the sort of resource super cycle time, and so uh, looked like the people that were in the resource sector were having the most fun. And so I found a way to sort of get myself into the group that they had started there. And so I started working in the resource sector in 2005, and was able to sort of have a front row seat to watching, a wild bull market uh, in almost every commodity. And saw the amount of fun that other guys were having, and I wanted to be part of that fun. So that's how it started for me. And I went from research to working in investment banking within that firm, and did the D2F list deals on the street at the time because we had no contacts, and not a lot of experience. So but you got to start somewhere, and so that's what we started with, and learned a lot of really, really, really interesting and great lessons from it, and which sort of propelled us to where we are today.
What D2 to F list? What's what is that within the industry?
Like,
Cold calling? Cold calling?
no, what that means is basically, the deals that no other investment bank wanted to do, basically.
Mm-hmm.
So, we were doing, and that's not a reflection on the investment bank that I was at. It's just the fact that I was working in investment banking and I wanted to go do my own deals, and I didn't have the connection. So I would go to a conference and I would meet somebody, and they would pitch me on this amazing idea and concept, and I'd go, "That sounds amazing. I would love to try to raise money for you." And then we would go try to raise money for them. But I didn't have the background or wherewithal to know whether that guy was a liar, or whether that guy was a smart guy, or whether that guy was going to be successful, or whether he knew how to get um, exactly what his thesis was to play out. I didn't have the skill set or the knowledge base to know how to do that. So when I say D-list deals, I just mean, it wasn't the ones that all of the premier investment banks at the time were fighting over. It was more of the me going out and literally trying to find things that I thought were interesting, but I don't know that I even knew what interesting was at the time, if that makes
What about
sense.
that technical knowledge within the mining sector? I mean, how did you start to gain that so you could start to decipher, what would be, even though like you could call it a D list, whatever deal, but it actually might have
Yeah.
some legs. It's something you could go sell because it's technically sound.
Yeah, exactly. Well, what we ended up doing really, really quickly was figuring out that we needed the technical capabilities, and so
Mm.
we went and hired, research analysts, and we went and hired, technical people to work within investment banking for us. And so let's just say that the D list deals happened in the first year, and then we kind of worked our way up. We kind of worked our way up pretty quickly from there. And there's some people that are in the industry today that, like I remember Tara Hassan was, I think, the first. You probably know Tara. She's very well known. Has done, had a great career in the sector. And she was working at Red Lake, I guess for Goldcorp at the time, and came and worked with us. She was, I think, the second person we hired. So our knowledge and understanding of the sector uh, expanded dramatically with that. But it's just, anyways, my point is at the time we didn't really know what we were doing, and we are just trying to figure it out, and very, very quickly we figured it out. But um, it's an interesting. It's a really really interesting sector with really really interesting people, and that drew me in. That drew me in
Yeah.
really quickly. So.
Was there an early deal that didn't work out where you got things horribly wrong?
Well, there was just things that you just don't know, and there would be people that had been around for a really really long time, and they would go, "Oh, I know that deal's not going to work," right? And then it's interesting now that I've been around so long, I'm kind of that guy now, right? So one of the first things we ever financed was this company. It was called M Gold at the time, and they had a project that was in sort of the Nevada California border, but on the California side it was an old Newmont project. Newmont had produced like 5 million ounces. There was still like another 5 million ounces in resources and reserves sitting underneath this effectively town.
Hmm.
And the company, when we started talking to them, had been working with the township for a very long time to try to get this old mine permitted again. Um, and they were very sure that they could do it. They had all these really interesting ideas of what they could do to sort of help the town with byproducts from the mine and things like that. Anyways, they were very hardworking people, and they were, I believe, trying to put their best foot forward in terms of getting this project re-permitted. But if I would go talk to anybody that had been around the sector, they laugh us out of the room on this project because it's like that'll never happen. That'll never ever ever happen. And sure enough, they were right. But interestingly enough, I went down and visited, and it's like literally underneath the town. This project's underneath the town, and it's in a part of California where people were coming to retire. So this was like these kinds of things you see really really early on, and you're like, oh boy, are you guys sure you're going to be able to do this? And they're like, oh, we think so. And then they'll introduce you to some like local politicians who are in support, and you're like, oh, okay, yeah, these guys are in support. And so then you kind of go down this path of really, and you want to believe too. Really early in your career, you really want to believe. You want to believe that this can happen because the opportunity is so big. Maybe we're looking at raising money for these guys at a $10 million market cap. They get their permit. This thing is 250, 300, $400 million or whatever it is, because it was high grade gold with good access, and but they needed this permit, and of course they couldn't get the permit, um, because like I said, it's basically a retirement community that they were in, and uh, fast forward a bunch of years later, I won't say which name of the company it was, but I saw a deal cross our desk that these people had got an agreement to go in there and not necessarily explore because there was really no exploration could be done. There was the gold was really well drilled off, but again it was a permitting question, and that company raised a bunch of money, and couldn't get the permit either. So uh, and I bet you in 10 years from now I'll see it again. And so that's how these things go, right? And I've had similar experiences in Spain. I've had some permitting is such a crucial and important thing to understand, and a lot of these companies that go into these things with amazing intentions, of actually wanting to help the community and creating jobs and things like that. But um, there's so much. There's just so many challenges and hurdles to overcome. So, when we look at things now, I mean, ability to permit is right at the top of our list. So, anyways, I have a ton of those kinds of stories of these kinds of things where, when you're younger and you are um, very optimistic and want to be optimistic, and it's in your best interest to be optimistic, you can get run over pretty good, and we got run over a lot.
Well, your
That
story
was one example.
your story isn't much different. I mean, it may be a little bit more on the professional side of how you got involved internally in this business, but from like an investor standpoint on the retail side, like I remember how I found exploration equities, and I kept on hearing stories about these great returns, right, and people
Yeah.
making life changing wealth, and I was like, oh, well,
What year was
that's what
that?
I
What
need to
year was
do.
that?
Like 2017, 2018,
Yeah.
maybe, and
Oh,
you were, and so
in
we were just
resource
like,
stocks?
well, I mean, listen, like good returns. Like I was hearing
Okay.
stories about the valets, right, and
Right.
and
Yeah.
the like that type of stuff. And so it's like,
Yeah.
oh well,
Sure.
I'll just go, I'll just dive into resources and very, very green. And of course, I got my butt handed to me over and over again because it turns out it's harder than just, uh, you know, taking a dart and throwing it at the board in junior equities. There's a lot that goes into it. But your story
Yeah.
is somewhat similar because you kind of see everything in front of you looks opulent, right? It looks busy and fun and rewarding, and you want to be in it. But it doesn't take very long for you to realize that there's a lot that goes into this to reach that point. And the best way to get to that point is by losing a lot of money
Yeah, you have
earlier
to.
in your career.
You have to.
Yeah.
You have to. And if you actually make if you make a bunch of dough really early, you're gonna give it back. That's like an almost guaranteed. Because these things are very, very difficult. And there's a lot of luck involved. There's a lot of skill involved, but a lot of luck involved as well. And so you're going to lose. There's some of these names you're going to lose on, but we have a much more. We definitely are still very much in the optimistic camp of life because I don't think you
Mhm.
could survive this long without being an optimist in the sector. But with a little bit more of a realist kind of bent to it, and then
Mhm.
just a ton of experience where we've seen so many transactions and so many different assets change hands and so many different assets not work for specific reasons. So we're much more adept at um, assessing and playing what we end up playing.
Yeah. Rather, you kind of took a leap of faith here. I mean, you start out in the industry, and then I don't know how long it was. Maybe you can walk us through the story, but you did go out on your own. In fact, young guy with I believe your brother was involved, and correct me if I'm wrong, but you went out and created your own kind of broker dealer from the ground up. That's something very difficult to do. But I just talk to me about that. Um, what you saw, the opportunity you saw. When was this, and really how you wanted to do things differently than what the rest of the players in the industry in Canada were doing at the time?
You're referring to pre medalist? Is that what you're talking about?
Yes, yeah, pre-medalist.
Yeah. Yeah, so I was at a small boutique investment bank in Toronto called M Partners. Amazing people. The guy that started that place, Steve Eisenberg, is still one of the smartest and most interesting guys on Bay Street, in my opinion. Um, uh, but we were really working on a lot of really small cap transactions and raising, our average tickets of things we were doing at the time. This is like 2006, 7, 2008. We might do a $5 or $10 million equity raise for a company. And then the financial crisis came in the fall of 2008. And, Bay Street just basically hunkered down. There wasn't any deals happening. And there was this investment bank in New York that was out there still raising capital for resource companies, and they were doing like 50 and 75 and $100 million deals. And I was like, oh, that's interesting. So one day I went down to New York, and I just happened to look them up. I was in town for other business, but I just happened to look them up, and then got to know these guys a little bit. And then one day they called me out of the blue and said, "Hey, we want to open up an office and a business in Canada. Do you want to do it?" And for me, there was a real allure of getting involved in larger transactions and just having a little bit more autonomy to do what I wanted to do.
Hmm.
And so I joined them, and it was a really, really interesting time. I mean, it was there was no deals happening on Bay Street. It was the heart of the financial crisis, and I, sort of set up a shingle in Canada for this New York investment bank. They were called Casimir Capital, and and we went and we started to build a business, and we were doing big deals, and you know, definitely more, looking back on it, definitely more investor friendly deals. Interestingly enough, the big Orion, everybody knows of Orion Mine Finance. The
Mm-hmm.
first deal that Orion Mine Finance ever did was with us at Casimir in the financial crisis. They financed a company called Great Basin Gold,
Hmm.
on a transaction that was, Great Basin Gold was, that ended up becoming Klondex, and that ended up becoming Hecla, which was not a good transaction for Hecla. But anyways, at the time, it was Great Basin Gold, and they needed to raise $100 million to finish their mine. And I'm using round numbers here, but they needed to finish their
Sure.
mine in Nevada. And BMO and all these other guys that they would normally go to, they they were closed for business, and so they came to Little Casimir to do the deal. And at the time, Red Kite had decided that they wanted to. This is pre-Orion. Red Kite became Orion once they split
Mm-hmm.
up, but they they wanted to be in the mine finance business, and so they did that deal. And at the time, they weren't that big, and I think the returns from that deal really kind of helped them raise the capital for the big fund. And since then, I think they've raised, I don't know, $10 billion or something crazy like that. But those were the kinds of deals we were doing, and it was really fun. And then we started to hire some people. It was just me for maybe 6 months or something like that. My brother came and joined us, and then when the Welling and Steve Sandusky is a partner of ours today at Medalist Capital, he came over and joined us. And then when Wellington West, which was a boutique investment bank in Toronto, got bought by National Bank, that freed up a bunch of people, and we sort of hired their old desk, and they came and
Mm-hmm.
worked with us. We opened up an office in Calgary because we wanted to be in the oil business. And if you remember, the 2008 sort of crisis was very short lived. The Fed pumped a lot of liquidity into the system, and gold went bananas, and silver went bananas, and oil went bananas, and everything was amazing for a good sort of 3-year period. And we had an amazing run there. I think went from nowhere to, certainly top 10 league tables, investment bank, raising lots of equity for companies.
This
In
was still
the
Casimir. This is
This
still
was
Casimir.
Casimir, yeah. This
Yeah.
was Casimir, yeah, yeah. And a lot of really amazing people were in that shop in Canada, and we had a lot of fun. We had a ton of
What
fun.
What did it take? What were some of the doors of opportunity that opened up that when you went from doing $10 million deals to $100 million deals? I mean, what are some of the things that needed to happen for you and Casimir for that to really grow, relationship wise?
I don't think it was anything. I mean, that's the interesting thing about it. Whether you're doing a $10 million deal or $100 million deal, it's like the due diligence might be, a little bit more, intensive, but basically it's the same process. And so it's really not much different. It's just, uh, talking to guys that write bigger checks.
Mm-hmm.
And if you show the guy that writes the bigger check something that they think is really attractive, they'll buy it. And so for me, it was a very instructive thing because, and a lot of times when you're working on the sell side, trying to get $1 million order is a lot harder than getting a $10 million order. And that seems strange. But what's happening, or the reality of it, what's happening is that the guy writing the $10 million check manages so much money, and the $10 million is so irrelevant to his relevant. Irrelevant is not the right word, but um, the amount of basis points in his fund that $10 million represents, um, he's looking for a basket of those to make
Mm-hmm.
the return. And so, he'll find 10 of those or something like that he really likes, and he'll allocate $10 million to each or something. Whereas the $1 million is it's it's a much smaller player that's writing that check, and it's a much more sort of arduous process, if
Well,
that
the
makes sense.
a million dollar deal, like you're looking at this and it feels like those smaller deals are just to get people to keep the lights on rather than to actually progress projects forward, right? Because $1 million, especially in the exploration industry, isn't going to go very far, specifically if you're drilling, and so there's going to be another
Well, I don't
raise
mean a
down the
million. I don't
road.
mean a million. I don't mean $1 million deal. I mean $1 million check from a guy.
Oh,
So
see,
let's say
okay,
$1 million check on a $5 million deal or
fair,
something.
okay, all right,
It's been my experience in life that those checks are harder to get, and I think if you talk to any sell side guy, those deals are harder to do than, let's say, doing a $50 million deal or $75 million deal. Often is the case, the 50 to $75 million deal is easier to get done than the $5 million deal,
yeah.
because the
Um,
company is bigger, the company is more liquid, the company is more well understood. The company is so it's just a function of how it works.
were you doing anything different the way you were running that business than say some of your peers, the other broker dealers in Canada? I mean, how'd you go about it differently than everybody else?
No, not really. It's a very sort of vanilla kind of approach to business. The sell side is 100% relationship oriented.
Hmm.
Certainly in the mining, oil and gas is a little bit different. I mean, oil and gas is very obviously still very relationship oriented, but they might switch up the leads on their deals more often than, let's say, the mining guys do, and they really really focus on who's trading their stock, more so than the mining guys. It's all degrees of differences, but it's just relationships. It's how close you can get as the investment banker. How close can you get to the company? How much can you get them to trust you? How many good ideas can you give them? Um, how much stock of theirs can you trade with your clients before a deal happens? It's the same way that they've been doing it for the 30 or 40 years before I got there, and not at my firm. I just mean on Bay Street generally.
Hmm.
And it's still the same process today. The difference today is that they used to make money trading stocks, and now nobody makes money trading stocks. So the business itself has become very challenging, very
Yeah.
challenging. The
So how
investment banking
about
business.
what about the retention of those relationships? Actually, before we get to retention, because that is
Yeah,
actually one of the things I wanted to talk to you about.
yeah,
Was but before we get to retention, I want to talk to you about the building of those relationships. I mean,
yeah,
Toronto's Bay Street is not a huge place, right? Especially if you're working in mining and in
yeah.
exploration equities. So you can basically run to a coffee shop anymore and run into somebody but that
Well,
works within the
100%.
sector.
Yeah,
But
same
talk
same as
about
Vancouver. Yeah,
the same as Vancouver. So
yeah.
I mean, how did you gain the relationships? I mean, you started moving big money, but to get to those, 10 $100 million type of deals, like you had to bring in the bigger money. So what did it take to get into the room, and do those deals? Who helped you out, or was it literally just grinding, knocking on doors, and being as relentless as possible to get those meetings, even if they were for 5-10 minutes?
Yeah, that's what it was for us, was just knocking on doors. And we were really lucky that people generally liked us. And people like doing things with people that they like, and people like doing things with people who are optimistic, and people like doing things with people who are excited about their business, and they can feel that they're excited about their business. Trust is a massive. Trust is the most important thing.
Mm.
As someone that's working on the sell side. So you need to have the client, let's say the mining company, CEO of the mining company, trust you. And they don't trust many people because everybody's got an angle, and there's so many conflicts. And when they can find someone that they can trust and tell things to, and ask to get something done, and it gets done, then you quickly shoot up the ladder with these people. And so it's just starting small, and then before you know it, you're their guy. And once you're their
Hmm.
guy, um, you do what you say you're going to do, you will continue to be their guy, generally speaking. And if
Y-
you're not, then you don't really want that guy anyway. So
Yeah. But you work with some, like, I guess you could call it the stars of junior mining, like the
mm,
big names. You
hmm
know these
yep,
people very well because of the couple decades of work and getting those relationships built, and obviously retaining those relationships.
yep.
And for us plebes here in the retail sector, like, it's just kind of curious, like, how it seems like once you can make one relationship within
Yeah,
that
yeah.
type of aura, like, it starts to, everything keeps to falling into place. I mean, is that wrong to think, like, once you meet one of those people, then all of a sudden you've got connections to everybody else that the us retail think very highly of?
Yeah. Well, you know what it is actually doing transactions. So
Mm,
so it's not just knowing people. A lot of people can know people. That doesn't really mean anything or do anything. But once you do something with someone of someone that you're referring to, this A list or whatever, once you do something with those people, then everybody else finds out that you did something with that person, and then you become sort of accepted maybe within that sort of hierarchy of people. And that opens the door to potentially you doing a deal with somebody else that's in that group. Or so it's really more track record oriented, where we might have somehow worked with somebody, and then somebody might have said good things about working with us, and that opens the door for us to go work with somebody else on a different deal. So it's really your ability to get to work with somebody, and then doing a great job for them, and then that just opens so many doors, so many doors.
yeah. But
Yeah.
that responsibility to do the deal, do you feel responsible for the out? I mean, obviously you do feel responsible for the outcome, but the management of, like, the people behind the companies and the projects, the from management to the
Oh,
geologists and the
100%.
work being done
Oh,
on the
yeah.
ground.
Yeah. And we've gone through lots of different iterations, and I don't know if there's any right answer in terms of because more often than not, there's the old famous saying is, the gold deposit or whatever that's sitting underneath is doesn't care who's drilling it, right?
Yeah.
Um, but more often than not, a really, really high quality management team will find a way to make something successful. Even if the geology didn't go their way, they'll pivot, they'll go buy something else, they'll do something else. They will be able to continue to finance the business. So they'll find a way to be successful. Whereas if you're with a group maybe that doesn't have that same kind of experience or cachet, once they run into trouble, that might be the end of the road.
Hmm.
And we've been in situations where that's happened, and it hasn't been fun. And yes, we feel responsible. Like, we're not running the business, but we might recommend it to people who co-invest with us. And when they lose money, we definitely feel responsible. But it's a very risky business, like things go wrong all the time, and you're not going to win them all. But you better win more often than not. Then you want to have, otherwise you won't have a business. So,
You mentioned the Great Basin Gold. What are some other big winners you had at Casimir?
well, we were super super active in the energy space, and so we were doing lots and lots of deals, North Sea energy deals. We were doing lots of Argentina, like lots of international oil deals. Were quite active for us. We ended up, along with the guys in New York, ended up in this really really interesting niche where we were financing the Western Australian gold companies.
Oh, really?
And those were, yeah, that was wild because gold in Aussie dollars was absolutely ripping at the time, and these stocks went up a lot. And there was an ability to go in there. In Canada, when you were doing deals, if you did a $50 million equity deal, there'd be 7 or 8 different investment banks involved. Whereas in Australia, you can go in there and get 100% of the deal. They didn't have that sort of share the economics and pay everybody kind of um, sort of ethos. So we were doing a lot of Australian business, and that was mostly the guys in New York were banking it, and the guys in Canada were selling it. But
Hmm.
yeah, we were very, very active there, and that was a very profitable business for us. Um, we did, I don't know, we did lots of stuff. We did the first ever. This was on the first run up in lithium that I was involved in anyway. That I was involved in. We financed a company called Canada Lithium, and that was a fascinating time. It was the first time that people started to talk about the uh, um, lithium batteries and the potential in all of it. And we got some of the largest investment funds in the world to buy that stock, and it was their first lithium investment.
Hmm.
And then that company ended up going bankrupt, which was not great. And there's a long story behind that one. And the next company that took it over, and then the next company that took it over, and the company that took it over now, I think is probably still challenged with it. It's a challenging project, but oh, we did lots of deals.
So
Yeah.
how did Casimir become medalist? Walk us through that transition.
So yeah, so we were basically just we were investment bankers, and the people that we most looked up to were the people that were sort of, and that what it means to be an investment banker is you just get paid a fee. So whether the deal is good or the deal is bad, it doesn't matter. You get your check and you can just move on to the next deal. And the people that we admired the most and respected the most and wanted to sort of emulate the most were the people that were doing things with their own capital and taking risks and being entrepreneurs, and being principals. And so um, and I personally didn't like the way that the investment banking business was going. It was just becoming a very challenged business. And so yeah, my brother, myself, and Steve set up Medalist in 2014. I want to say it was 2013, 2014.
Mm-hmm.
And yeah, we've been sort of plugging away since then.
It was
And
all
the idea behind Medalist was just to be principal investors and
Hmm.
and do our own deals and create our own deals and be part of the action and have skin in the game. That was the
How
idea.
much of how much of your own personal capital, I mean, collectively between the three of you, did medalist start out with?
Oh, not much, like a few $100,000 probably or something like that. Not a lot of
Really?
money. Yeah, yeah,
And what's the
yeah.
what's the AUM now? Would you suggest?
Oh, yeah, a bit more than that for sure. But no, the thing about Medalist was, I mean, we'd made money, but we were young and we all had to buy houses for our families with kids and all, so we had some money, but we weren't super wealthy by any stretch of the imagination. And when Medalist started, the idea was still that we would be doing sort of select investment banking, but mostly focused on the merchant banking side of the business.
Mm-hmm.
And our partner Steve has a really wonderful relationship with Eric Sprott, and he sat down with Eric at the time and said, um, he sat down with Eric at the time, and Eric was super supportive of us going out and doing um, this this venture. And Eric started us out with. Sorry, we got
You're
dog
good.
dog issues and delivery things happening.
More dogs. We're dog
Yeah.
friendly here on the pod.
Oh, okay, good. So anyways, yeah, so we started out doing a bunch of transactions, thinking that we were, and I remember rushing to get all the paperwork done and going through the OSC to get set up and licensed and registered. And I want to say this was 2014 because the gold sector had been kind of shit for 2 years, and we were really, really, really excited about the turn. The turn was on, and we would talk to our mentors who were big investors in the sector, and we would say, you know the the gold turn is going to be explosive and dramatic and everything else. And of course, this is 2014, and so we were wrong or early,
Mm.
depending on how you look at it. There was no rush.
Right.
But we did, and so we started with sort of a hybrid model of we were gonna do some investment banking and do some merchant banking, and um, and so we were able to. And what we'd always do is if we ever made a fee doing the investment banking, we would take it in shares and try to grow our portfolio that way. So that was
Mm.
sort of the idea and the concept, and we were, I guess, able to sort of parlay that into bigger and bigger stuff. But yeah.
It's our the little research I could do in preparation for this interview was with our mutual friend Dave Lotan, who
Mm.
gave us the introduction to one another. Um, he said, and he gave me permission to quote him in this. He said, "Riley and Medalist team were the most successful capital introductions in the bear market of 2011 to 2016."
Mm.
So you're right. You're either wrong or you were early. But we all know in this sector, um, being early and being patient can be very, very rewarding. So maybe talk about when you've been through a couple cycles in the metals space, and when you see a cycle really down and out in the trough, everything's ugly, nobody wants to buy. Are you able to recognize that now? And do you see those opportunities when they do become, apparent as kind of a market participant?
Um, yeah, I think the answer is yes. I mean, and Dave brings up an interesting point. I mean, back then, I mean, there was just really no capital. I remember in 2015, I don't know that it could feel worse. I mean, were you investing in 2015?
No.
I mean, it was so bad. The
But I
pulse
was
was so bad.
invested in 2022, and that felt really bad.
That felt bad. Yeah. To me, I feel like 2015 felt worse. I
Hmm.
remember we were working with one of our close companies. I remember we were working on doing a Mexican silver roll up in 2015. And I remember we drew this sort of circle around a map where you could pick up 1 billion ounces of silver. Okay, there was like 5 companies that you can go roll up, right? You could pick up a
Wow.
billion ounces of silver. Yeah, and I think you could do all of that for like under $100 million of market cap. Like that's what 2015 was like. And by the way, we couldn't even do the deal. We couldn't. Nobody would agree to do the deal because it was too hard.
Why?
Like there was just
Oh.
because you'd have to go raise capital, and there was nowhere to go. There's nowhere to turn.
Mm.
In 2015, there was nowhere to turn to go raise capital, real amounts of capital. That deal probably would have needed, us to go raise 30 or $40 million of equity for it to matter. And, these roll-ups are hard. I mean, you have to get 5 different management teams to agree to do something and buy into the vision and everything else. And, I mean, that would have been an unbelievable deal, obviously. And looking back on it, it's a shame we couldn't do it. But, we have hundreds of those deals that didn't happen. But 1 billion ounces of silver for under $100 million in
Mm.
2015. Those were some interesting days, and it just kind of felt like people thought that there was no hope left or something. Everybody was drawn down on their treasuries and weren't really. And then 2016 was amazing.
Yeah.
2016 there was like 9 months in 2016 where things were like euphoric and always exciting. But interestingly enough, like throughout all the bear markets, there's always been pockets of excitement, right? There's like discovery stuff always seems to work, right? There's always seems to be a good discovery story out there where they're making good discoveries and people are making money in it. So there's always been places to find excitement and find optimism, but boy, 2015 was pretty tough. But yeah, we were doing all that. We would go and we'd have a list of 10 or 12 or 15 different people that would like to invest in our ideas. And so that's what Dave was referring to is we would, raise capital for companies and that would help us fund our merchant banking efforts. And then probably around 2017, 2018 is when things really shifted for us and we spent a lot more time and me sort of exclusively on putting transactions together for ourselves.
Riley, I've only got a few more minutes, but I want to ask you kind of where we're at in this cycle,
Mm,
and kind of how you and Medalist are looking at where we're at. I mean, obviously, we're seeing gold up near those new all-time highs, almost $2,500 per ounce.
mm,
We're starting to see margins improve in the major gold producers, but yet it's still a very volatile market in general, all across the board. And the exploration sector, the TSX venture, and all the Canadian stocks can just not find the capital. I think it's worth, we could have the debate if they're getting the capital they deserve or not, given where the gold price is. Um, but it's tough. It still is tough, even as the metals have run, the equities have not. What
mm.
is Medalist's approach right now? Are there deals to be had? Is there opportunities? Are there silver linings in this? Or is it still very, very tough to get the capital to push projects forward?
Yeah, I think it's still pretty tough. I mean, good management companies can raise capital. Um, you know, one of the companies that we're involved in, Integra, just raised 20 million bucks yesterday. They just did an acquisition of a project in Nevada. Um, good companies can raise money. Good quality management teams can raise money, but it's not easy. It's very difficult. Raising money privately is exceptionally hard right now. Nobody
Mm-hmm.
wants to put money into privates. So, which is kind of tough because a lot of these companies shouldn't be going public. They're not ready to be going public, but they sort of are forced into going public. Um, even though it's not in their best interest because it's the only way that they can raise the capital they need to advance their businesses. So I don't know how that gets fixed or how that gets changed necessarily, other than the market just rewarding some of these investors, um, and uh, and people feeling comfortable that companies can get public again. But yeah, capital is very constrained right now. A lot of the funds are still one in and one out, and so there is. Um, uh, but yeah, like I said, the good companies can raise money. So it's not an easy time, but I'm
Mm-hmm.
very, very, very optimistic about the next 5 years being a resource investor personally.
I perhaps biasly disagree with you on the private
Mm,
company because I've done about three financings for private companies in the last 6, 7 months, I'd
yeah,
say.
yeah,
So I like it. They're more agile. The equity markets just haven't been there
yeah.
to support it. So, and good management teams with good projects. So,
Oh,
I
I
yeah,
totally agree that that's what they should be doing. I just saying it's really, really challenging
yeah,
to raise the money privately. Just these are things that we've witnessed ourselves. So, um, yeah, but I'm very optimistic about what the future holds, just because gold and silver are. It's kind of interesting. I would have thought that we'd all be doing much much better given the metals prices today. But the equities haven't followed yet, but I think eventually they will.
yeah.
So
There
we got
there
to
was
stay in
some
the
big
game.
news. Yeah, absolutely. There was some big news here. Let's just I got to start wrapping this up. But a huge $4.5 billion deal for Filo between
Yeah.
BHP and Lundin Mining. Obviously, I don't think the acquirers of Filo was surprising. Maybe the price tag was a nice premium to it, and obviously doing that financing to make sure Filo can continue to progress Filo del Sol project in the meantime until it closes. This is kind of an end of an incredible story, and I feel like we need more of this. I mean, with your eyes on the horizon, where is the next big deal going to happen once this is written in the
Well, it's
stars?
interesting you say like we need more of this. Yeah, we need more of this. But like the history of Philo is, the Lundin family have been financing that thing for 25 years. That's the thing is this thing you got to be so patient and you have to have such deep pockets to do these kinds of things, to go into a district and spend the time and do the science and the real exploration work required, and have all the theses that you have not work out, and then move on to the next thesis, and etc. That's 25. What is that? 25 something years. And so Philo is an amazing success story, but it's also a story of how hard it is to be successful in this sector. There's not too many families out there that could do what the Lundins did, and good on the Lundin family today for keeping that within the Lundin family company. So, anyways, I think it's an amazing thing, and it also goes to show that there's just not a lot of great copper names out there, and so that's probably a good sign that copper is going to be awesome for the next cycle.
It certainly feels that way. All right, Riley Keast, Medalist Capital. Thank you so much for doing this. I know we've been kind of going back and forth about whether we do this or not, but I really am grateful for your time and for the opportunity.
Yeah, man. Thanks so much. Appreciate it.
Yeah. All right. And that's a wrap here this week on the podcast, everybody. We'll be back Monday morning with the morning briefing. Have a wonderful weekend. Be well, be safe, have fun.
Cheers.